If you are thinking of forming a community interest company or a CIC, or you are already a CIC, then you should have come across the concept of an asset locked body or asset lock. In this week's I Hate Numbers video, I'm going to go through the idea of what an asset lock is, what an asset locked body is, and the reasons why we have that concept at all in the United Kingdom. Hi folks, my name is Mahmood. I'm a business finance coach and accountant, and I've worked with businesses and arts and social enterprises for over 3 decades, helping them make more money, save tax and time, have the business they want to aspire to achieve, plan it, do it, profit is my watchword. Let's crack on with the video. Now, a community interest company, by the way, folks, by its very nature, is an organisation that's there to benefit a community. That community could be quite narrow in its outlook, or it could be the wider community. Within that concept, a community interest company has something special called an asset lock. Now, first of all, let's explore the concept of what an asset lock is, what an asset locked body is, and also the reasoning behind that. And that's what we're going to do. We're going to go backwards. Let's flip it on its head. Now, a community interest company, by nature, any profits that it generates, any surpluses that it has, is not for the individual benefit of the people who run that organisation, but to put back into the CIC to help deliver its why, to help achieve its social and other purposes. Funders who may be contributing by way of grants, individual donors who may be contributing funds to that organisation. Their objective when they provide those funds is to help that organisation deliver its purpose, and it's not for the enrichment of the individuals that run that organisation. Public money typically lies behind grant giving. Those funds have come from local or central government, which ultimately comes from the likes of me and you. And we want to make sure that that money that's put to the community interest company is put for that purpose. And it's a typical feature of what I would call a not-for-profit organisation that enrichment of the owners is not the primary objective of those organisations. As a small side note, folks, by the way, not-for-profit does not mean that you should not be making profits. Far from that. You should be making profits, whatever type of organisation that you are. The key difference is in a private company, in a private organisation, any profits that are generated after paying tax can be distributed by way of what we call dividends to the individual owners and the shareholders of that organisation. In a not-for-profit organisation, typically like a community interest company, then any surpluses and profits are made. You cannot distribute by way of a dividend. Secondly, the purpose of that organisation is not to make the wealth of the individual founders better and grow, but actually for serving some form of community benefit. Now, that's the rationale behind, effectively, the value that's generated, the money that's generated, and the assets that are owned by that organisation, not to be for the personal benefit of the founders. We then move on to this idea of asset lock, and it means what it implies. Any assets, equipment, machinery, land, buildings that are actually owned by the CIC, if that CIC ceases to exist, then those assets must be passed on, must be locked in, and they must be passed on to a designated body. We're going to talk about asset locked bodies in a moment. Now, the asset locks, any transfer of assets that are provided to another entity must be chosen and selected, either enshrined within the articles, typically, that's what I would recommend. And within that asset lock, we know that those assets, in the event of the organisation decided to cease activity, it may be in a situation where it's fulfilled its objective, fulfilled its purpose, it may decide to voluntarily close down. Those assets are then passed on to a designated and pre-selected, typically, another body. Now, that body that it's transferring those assets to could be another community interest company. It could also be a charity. It could also be a CIO. It could also be a registered society. Now, those 3 examples that I've just quoted, folks, like a CIO, which is a charitable incorporated organisation, another CIC or a charity are also, by the way, known as asset-locked bodies. Those assets that are there that are building up in a charity, in a CIO or a registered industrial society are there for the benefit of the wider community, for the audience, for the beneficiaries, and not for the individual owners. And they are also known as asset-locked bodies. Any transfer of assets outside of the CIC, for example, have to be made at what's called market value. So if I had some land, perhaps, that I wish to sell, then I must make sure that the value that I generate for the sale of that land must be at full value, full market value. That means that the CIC, for example, is not reduced in value because you're transferring assets at an undervalued marketplace. Those asset locks that are in there are to protect the beneficiaries, protect the organisation, and also to protect the funders from misappropriation and misapplication of public funds. Now, as a tip, folks, if you are forming a CIC for the first time, or if you've already got an established CIC, check your articles. Do you have an asset lock in there, in the sense of, do you also have a designated recipient of the assets of your organisation? If you have one, fantastic. Make sure that the recipient of those assets is comfortable with being the chosen partner. If you don't have one, approach one. It could be an organisation that's very similar in objectives, similar to what you're doing. Seek their permission, or certainly make it known that you're choosing them, and make sure that's enshrined in the articles. Funders typically, by the way, nowadays will check your articles to make sure you've got an asset lock in your articles. If you don't, you can always get them amended. You can always get them altered. Folks, I hope you found this useful. I hope you understand the concept of an asset lock, what it's there for. I hope you understand the concept of an asset locked body, which can be a CIO, a charity, a CIC, or a registered society. I hope you understand the rationale and the reasoning behind that is for protection. It's there to make sure the assets that are built up by that organisation are used for the benefit of the beneficiaries. One thing I should mention in passing, the assets that are in the CIC, for example, are there to help generate income, to help support the infrastructure. That's not to say that you can't use those assets for those trading activities. You certainly can. So that normal rules of commercial engagement will still apply. Folks, if you found this useful, I'd love you to get some feedback. I'd love you to give that a thumbs up. Perhaps there is somebody in you that you know in your network that could benefit from the content of this particular video. If so, share it with them. If at any point you feel you need some help defining and understanding the asset lock in your business, or perhaps to form your own CIC, then check out the notes. The contact us is there. And until next time, I'll see you on the other side.